is Martin from Brokerage, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we try to understand from the technical charts and what happened exactly during the previous week in the market and then plan for a better trade for the upcoming week that's starting tomorrow, April 29, Monday 2024. Let's deep dive into the charts. Battery is down. Let me just quickly plug in. Yes. So this is a weekly chart. You can clearly see that it's a cup and handle with multiple flag breakouts. That's the Nifty on the left side and the Banknifty on the left side. Clear uptrend bullish rally is going on. It's very evident. In another view, we see the same multiple flag breakouts. It's all happening in the form of within the trend line channel. And the same is seen in Banknifty also. This is another daily view. We see here up move and then consolidation, further up moves, but the same can be seen on Banknifty also, or on sub move, but it's very volatile as compared to Nifty, right? Consolidation up move, that's what is happening. Now look at the candlesticks of Nifty and Banknifty here. Like last week's candle was a clear up move after market made small correction of, not small actually, 5% from the top. Was a correction that happened after the bad news on the war and all that came, and market quickly bounced up last week with huge bullish candle on last Friday, and this week also it continued to do the same, but it has been volatile, very volatile. And if you also huge bounce back, and then we have the next week which is also maintaining the green and the uptrend, but it was very volatile. Look at the VIX sizes, right? Huge VIX sizes indicate the big resistance that is faced at, while it was trying to move upside. So now it is almost cleared all of the retracement, except that it's still falling short of few points to hit the previous all-time high. So that's where it faced resistance. So overall, if you see, it's consolidating within. If you just draw a box here, you clearly see that Nifty is consolidating, right? Candlestick wise is what we are studying in this slide. So candlestick wise, it was small body. Small bodies are all indecisive. VIX has indicated the big bear world find. So there is indecisive. That's evident in the week-to-week basis analysis on the charts, and it is hugely volatile. Right? These are the two things that we can study. We can understand from the candlestick patterns. And if you go to the daily charts, last 4 days, if you see, it's this big candle that you see on last Fridays, last Fridays, not the immediate last Friday. So after that, it was trending up with 4 days. 3 of that was very indecisive, and then Thursday it had a big breakout after a dip that made it hugely volatile, causing spike ups also, big spike ups and losses due to the volatility created for the option traders. And then after the big move, you have a Friday which gave up most of the gains of the Friday. That's profit booking clearly, and that's resistance that you are seeing there at the zone, which is very, very close to the Nifty all-time highs. And the Nifty all-time highs also, the same thing can be seen. And after previous Fridays, from Monday onwards, it was up move, but the candles were initially red and facing stiff resistance, and then you have a Thursday with big breakouts, and Friday which is given up half of that. Okay, so that's kind of bad. So here it's indecisive small body on a week-to-week basis, but here on the last closing is actually a dark cloud cover in the case of Banknifty, and it's bull trap in the case of dark cloud cover in the pattern in the case of Nifty, not Banknifty. In Banknifty, it is just falling short of the dark cloud close minimum requirement of falling more than 50%. So otherwise, it's a clear bull trap that you can see there. So that's a bearish wide range candle with a bull trap and dark cloud reflecting in that. So that was most of the gains of last week. But on each daily candlesticks for the last 5 days. If you see, it was trending up with violent, volatile, big breakout move on Thursday, and the very next day profit booking is taken out most of the gains of that, more than half of the gains of that. So that's the daily candlestick patterns on the indices that you see there. And if you go and see the Bollinger Bands, you can see that it's consolidating. The bands are not expanding either side, Nifty and Banknifty both, but it has got bullish bias because it's about the median of the Bollinger Bands. So it indicates more sideways moves could be expected for the coming days. Before we come to the Nifty support resistance levels and Banknifty's support resistance levels, let's go back and quickly wrap it up. So Nifty managed to maintain the bounce of previous week, and the higher correction so far remains to be 5% that happened earlier in a couple of weeks, and then it has formed a small body, right? So it's positive close week to week basis of more than 1%, 1.22, 269 points gained. And remember, in the mid of 35% rally, weekly expression moving average of 20 is still maintained. Nifty also bounced, continue to maintain the positive close on continuation of the bounce of the previous week, and it's closed in this again with a clear dodgy in the case of Banknifty, and overall it closed positive more than 1%, 1.29%, 615 points up a week to week basis. And it's still above the weekly exponential moving average. Remember, Banknifty is 26% of retracement of bullish rally that is happening with nearly 8.5% of correction so far, the maximum correction that has happened. On the daily charts, if you see, it's negative close of more than 0.5%, 0.67% on 50 points and 0.6%, 294 points on the bank, both creating wide range bearish candle bull traps and patterns and all that you see. So basically, it was managed to close green on a week-to-week basis, about the 20 exponential moving average still, and recovery from the previous fall continues. But stiff resistance can be seen on the last day, and which stopped the price, the momentum and the trend to gain further. Having given the most of the gains, price gains, were given back, half of the price gains were given back, can say, from the previous days, Thursdays gains, right? So it's now crucial whether the moment. So the market has quickly got bought in. That shows clearly the strength of the bulls out there. But we are back to creating another all-time high. That's this time maybe getting closer to the 23,000 is a big rounding number, and that's where volatility and resistance will be there. So the question is, will it fizzle out here and then go take its own sweet time consolidating, or would it go down and retest, or would it straight away break out, having done all the violence in the last week with respect to the volatility? So that's the question in front of us. So Bollinger Bands are clearly indicating, as we had seen, that it's sideways consolidation is happening, but with bullish bias. The support resistance levels are very clear. It's like 49,000 would be the first resistance. It's a big rounding number, and 49.57 will be the all-time high. So that zone is going to be big resistance, and then for now the immediate resistance will be to clear that 48,700 nearby zones where it had made the previous swing low, right? The previous days, so previous Friday's candle high would be a first resistance to take out, and after that you will have the 49,000 big rounding number. So after the 49 all-time highs are taken out, it can go as far as 49,500, right? To reach the top of the trend line, and from there it depends on whether the breakout continue. It can go as high as 50,000 very easily, right? If that move is going to be so, but there's going to be resistance obviously there. Downside on Banknifty, supports come in at 47, of course 48,000 will be the big rounding number supports, and after that 47,850 will be the 20 expression moving average support, and 47,350 would be the 50 expression moving average supports, and then 47 big rounding number supports, and 46,785 has got the 100 expression moving average supports. If all of this breaks, it comes back to 45 845, which is 200 exponential moving average support. We have 46,000 of course before that is support. So let's see support resistance lines for the bank nifty. Moving ahead, if we haven't seen that support resistance for both. Did we see it for both? I think no. Nifty, we had not seen, so we'll finish that out. So the first resistance for the Nifty would be the previous highs, where it got sold off, and that's about the 22,500 zones. Right. So it's crucial to clear that, and then the major resistance will come in at all-time highs because it's at 22,775. So market it faced resistance at 22,600 to be precise. So that 22,500 and 22,600 and 22,775 all-time highs will put resistance upside. After that, you can go and meet the resistance at all the rounding numbers about below the 23,000. Right, as far as the channel top is concerned, it can easily go to 22,900 levels and then break out from there to 23,000. Right. So downside, the first support could come in at 22,350. So it's about 20 exponential moving average. That is breached. You can find a gap support at 22,200. Then 22,159 has got 50 exponential moving average support, and then 22,000 big rounding number would have a support. 100 exponential moving average comes at 29,700, which also has the previous swing low of 29,710. So that would be the major crucial point, and any fall from down there would not be great. Right, 100 exponential moving average, if it breaks, then it's another nearly 1,000 points. 2734 is about 200 exponential moving average. Right. So we have to watch all these crucial points of trendline channel bottoms, swing lows, gaps, and exponential moving average, Fibonacci retracement levels, and all of this. Right. So that's where we have a probability of the indices the charts finding the resistance with supports. Let's move ahead with the momentum in the trend analysis. We basically do the Nifty and Banknifty both. We see the weekly and the daily time frames and try to understand how the momentum has done one. So we can see that the weekly charts, it is climbed to the bullish zones, but in the daily short-term charts, it is persisting below the RSI 60. Right, so there is short-term resistance of momentum. That's clearly seen. And overall it's tends to be sideways. Bank Nifty has not climbed into the bull zones yet. Right, just below that, sideways and rising up. Right, so otherwise it's sideways momentum. And the trend, if you see, it has crossed to the bull zones on short term on both time frames, but Bank Nifty is still bear zones on the medium term. Right. So Nifty is clearly showing is in the bull zones with respect to the trends, and Nifty has a catch upon the. But Nifty also has got falling strength, not rising strength yet. Falling strengths in the case of bullish DMI positive would mean that the bullishness is not strong enough. At the same time, the medium term bearish for Bank Nifty is also falling strong. That means it's not heavily bearish and can climb back to the bull zones, cross over to the bull zones really fast. So overall, trend is good, fine. Short term trend is good. Momentum is still sideways. Right, trend has to catch up on Bank a little bit. Right, otherwise things seems to be fine. Trend is not having enough strength. That's what you can make out now. Volatility and the open interest. So that's where the big thing happened. On Thursday we had a big crash. Last Thursday, big crash of 20%, and week basis it's nearly 19% of the big crash that has happened for some reason in the last monthly expiry day of the index. So that's just made it to 10.93. So it's back to the very low volatility regime. There's not much difference between the blind volatility and realized volatility spread difference. So hardly 40%, nothing much in favor of the option sellers, and 90% is also hardly 7 Remember, we are at 80, 90 and all these levels a few months back. No, it's difficult for option sellers is what volatility analysis is showing. So VIX is also an indicator of the fear and greed, and also the volatility index. It's long volatility regime. One way that way it's positive, but it's extremely low. So where it is extremely low, option sellers will find it very attractive. Option buyers may find it more attractive. Moving on, if you study the open interest data, you can see that it's long unwinding, which is bearish in nature. We're unwinding the long positions. As per the futures or build up that we are seeing on the last Friday's big profit booking. That's why it has come in. And open interest PCR for the April 30th Banknifty expiry and the May 2nd Nifty expiry. We show that it's not bullish. It's not bullish enough. It's actually bearish 0.76 and 0.8, far from the one limit that we have for categorizing it into bullishness. So it's a bearish put call ratio. It's a bearish futures I built up last on Friday. So and it's a very long wicks, and yeah, not great news for the open interest analysis. But let's look at the support resistance level using the open interest. We had already seen that levels using the technical charts. Now, as per the open interest analysis, where is the highest put writing and highest call writing? Like where is the support and resistance? So the highest put writing is in at 21,500, and the highest call writing is in at 22,500. So it's 1,000 point gains. It's a weekly expiry. That's got 4-5 days. But it's a target in May 1st already. So it's a 4 days trading left. Then we have a wider range relatively. Second highest put and call writing is in at 21,000 and 23,400. So it's very wide range. Right, so you can clearly see the resistance is hovering around, right? More than the highest. And yes, Banknifty, the highest support is seen at 46,000, where the highest put writing is seen, and highest resistance at 48,500. That's 2,500 points. That's also very wide. Second highest put and call writing is seen at 48,000 and 50,000, 2,000 points. PCR basis, so all our bearishness. That market is not the options and futures or is not indicating that Google is going to break or make new highs. Maybe consolidating or maybe even retracing further. Let's move ahead and see what the sectoral indices are saying. The IT index is showing 1% up. Previous week basis, metal 3.5% up, auto is 2.5% up, 3.25% performance percentage up, FMCG 2.4% up, reality 4.67. So across the sector, you can see that it's big recovery has happened. Big recovery across all the major sectors. That's what sectoral indices are saying. But what's ready in for buying? What's ready in for long trades? So it's where the metal just on bullish. About time frames, that's momentum, and then it's the reality, which is also trying to the bull zones. Others are all struggling either the short and medium term, struggling the sideways, and to get to the bull zones in both time frames, short and medium. Right? But across the sector, big up move is very clearly evident. This is the charts of the different indices. You can see that on the corner top, the IT index is there. It has been pulling back now. It seems to be falling and trying to take a support at the RSI 40 levels, and while the trend is still bearish. So it's a couple of patterns that's getting formed, and below we have the IT, which is also in the bull zones. So it has been breaking out at the top of the trendline channel. Auto is on the top of the trendline channel, bull zones. With respect to momentum and the trend, from at the top zones consolidating for another breakout. FMCG had been consolidating, shows in green, sideways up move, not in the bull zones yet. Reality at the very top, breaking out from after consolidation, bullish momentum and the trend. So yeah, so it's only the FMCG that is showing some pullback, and the IT. And IT had been dropping. And FMC and IT, others are all in the bull zones, all-time high levels nearby, right? The heavyweight index heavyweight stocks, the stocks that contribute maximum to index. HDFC Bank, sideways, the red camel formed. Lands bullish, consolidating a red candle week-to-week basis, and ICICI Bank green candle bullish and green candle. So HDFC sideways, Reliance and ICICI Bank green. IT stocks had been trying to recover, Nifty especially. TCS has recovered. This is still in the sideways falling mode, but TCS is also in the sideways rising mode. Actually, it had fallen to the bear zones and trying to climb back into the sideways. So Infos had been had got hit back the max. So sideways, Kodak had a big more than 10-12% of fall last week following some RBI policy news, and it had been traditionally a contrast stock and it has been consolidated for years just like that. ITC is showing some green, momentum is sideways and rising up, so it's all sideways here. It's all sideways with some trouble with the Nifty, which is still in the bear zones. With respect to the momentum we are speaking of, so it's the Airlines and the ICICI Bank, which are always two next series that's showing strength. The rest are all in the sideways. Mid-cap, small mid-cap has complete recovery has happened. Actually, small package is breaking out once again. Remember in the March it had some retracement following some SEBI guidelines and all that. But once again back to all-time highs, where there is momentum and trend. Institutional participation. So it's 21,000 crores has come in the cash market from the domestic institution, but FIs continue to sell. Just because the foreign money is not coming is not making the market fall, because mutual fund money is flowing. Crores of investors across the retail money is flowing. That's what you're seeing. So 14,700 crores of FIs, and FIs have been selling like anything, selling forever. So they have been doing that since several months and months now. And so unless and until the Fed rate news comes in, and which could favor the FIs and they come in as buyers, unless and until that comes in, market won't fly like rocket. It will be only the institutions which may be holding. But you need for institutional participation also. Okay, so that's what exactly is not happening. The retail side also that longs are moving down. So there was few bad news that came last week. One was not last week, previous 2 weeks. This is what is troubling and causing the FIs to sell even more. So there is one foreign institutional Mauritius policy changes that had come in, which turned out to cause more FI selling. And there was a war uncertainty in the Israel-Iran conflict last couple of weeks that caused FI selling. And there was some big volatility, unusual volatility that has come in the options in the last couple of weeks. And the news has come out that there was some Jane Street or some hedge funds which were doing the pumping and the dumping and causing huge volatility artificially, not in the ethical way. So that is causing huge volatility and losses for the option traders. And overall market has been very, very jittery. Global markets is what we are trying to see next, and commodities and currencies. So currencies, if you see, dollar has had flat red close once again, but if you see the charts, you can see that it's a cup and handle, and then it's spiked up and trying to move up. So it's having bullish rising momentum. That way, it's not fair, not good for an Indian economy. Otherwise, the dollar spiking up, and emerging market like ours, it's not that great. It's at 106 now. And USD currency pairs also closed flattish green, 83.37, and that sideways rising momentum down. You can see that it has been consolidating forever, being managed by central banks basically, right? The price is at the 83 levels forever and ever. Now it's breaking down. Now it's able to move up. It's being central bank controlled. It's at 83.64, momentum sideways and rising up. So will be continue to be at the weak levels above 83. Gold had spiked up 2.3%. Remember, it had hit all-time high at 24.29. and then taking small trades, but momentum is still bullish and rising, bullish and falling, but absolutely very close to the all-time high levels. Crude oil is also showing green, although it had slipped to the side slightly. It's still very close to the top of the trend line channel length at 83.64, and it's a 2% up. So 2% up, but it's in favor of the bears, in the sense that the crude is at the very top, has been spiking up recently. Gold also very close to all-time highs, has been spiking up, causing worries as to if the money is flowing from equity to gold to safer haven. And US markets is where some hope is there. Hope has come back after a retracement of 6 to 8% of correction. Now the Dow Jones, Nasdaq, and S&P 500 showing some green, but Dow Jones flattish, less than 1% up move, and Nasdaq it's 4%, and it's 3% of S&P 500 up move. So that way it's trying to move from the correction. That's positive in the mother market, but the momentum is slightly sideways and rising up now back to the bull zone. So that's what's happening. So that gives them hope. Otherwise, spiking gold and spiking oil and weak rupee is all worries, right? But it is not confirmed that the US market has stopped its correction. But a green weekly candle gives hope that probably it may. Now the stock picks and action moves, two of them. Fyers India is breakdown of a cup and handle, and it could be reasonably good swing trade opportunity, given the fact that this trend line, it's a trend line breakout, cup and handle breakout pattern, and momentum and trend indicators are bullish. Steel rotating in the metal sector, cyclical bullish rally now. Momentum is bullish, trend is bullish, and it's a breakout from the cup and handle. Already happened. Any price that we can get in, if we can manage to get in at a price or a pullback, it could be rewarding. What could be less if you're trying to enter right away at the top. Probably the market may give you an opportunity with a small pullback in between where we are to enter, and then go for 2 weeks of swing trades, so it can be rewarding. So it's a price, big volumes on both Fyers as well as the steel authority. Momentum is bullish, trend is bullish as per the RSI and the ADX, and price patterns are also bullish. So that's two picks, Fyers India and Steel Authority of India. Other actionable is it's Batman strategy, where we are selling OTMs for OTMs, and also buying inside hedges and outside hedges, completely protected. Reasonable risk reward 1:1, but exit before the expiry day. Range is also reasonably good, between 21,850 and 23,251. Probability is also huge. Small profits, but it's increase your capital size. So here the selling is 3:1. So if you are selling 6, you sell half of that. You buy half of that as inside hedge and outside hedge. So that way. So even for a 6 lots of selling, it will cost you only 1.4 lakhs. That's the beauty of this. It's completely hedged and risk defined. Don't expect too much of profit, but yeah, 2 to 3% a week is more than enough, for the capital that you deploy, right? If you invest 1.5 lakhs, you get 3% of that in a week, 4-5 days of trading. Truncated weeks, 4 days of trading, but you get that kind of money. So risk defined, it's completely hedged and risk defined strategies. Let's see Batman strategy on the Nifty weekly. Now to wrap it up, market has continued to move, continue with that move. Following the previous week reversal, bounce up, and short-term resistance is stopped the momentum in the trend to break out and get back in the bull zones yet on both indices, but price is about 20 exponential moving average. Higher low pattern is maintained, and although correction is 5 to 8.5% only after 26 to 35% of up move, breaking out of cup and handle patterns and flag patterns and all that. If we just try to bucketize parameters that goes in favor of the bulls and the bears, we have 20 exponential moving average that goes in favor of the bulls. Price is maintained above that, and one of the bank is having contraction, not an expansion on the downside at least. And higher low is maintained. It can bid and small cap analysis have recovered quickly, and then it's breaking out once again the small cap. And except the IT, all the major indices are on the sideways or bullish. None of them are in the bear zones except for the IT. In which stocks that contribute maximum are also, they have 2 strong size and lines supporting that, and so also trying to catch up and move up from sideways in the bull zones. This is a long alternative, which is good. And Nifty trend shift to bullish was on both time frames. The trend indicator really exists when Nifty has bullishness on both time frames. And what goes in favor of the bears is the fact that the PCI is not bearish, is not bullish, and it's bearish, and futures high is also long and riding. Institutions have been selling short-term momentum resistance, facing resistance and resistance. Actually, you can see that it has hit the RSI 40 and then move down. That's on the both indices. So it's still sideways, not in the bull zones yet. Right, and medium-term momentum on Banknifty continues sideways. Medium trend also is in the bear zones, not crossing the bull zones yet. Medium term, some troubles continue there for this trend. US markets are the red. Oh, I'm sorry, the US markets are green. That has to go in favor. But probably it's put in here in the bears because it's not a confirmation. It's a first green candle after the big correction of 6 to 8%. So that way, it maybe is still in the favor of the bears. Spiking is green candle, but it's it's very close to the top of the channel. Gold is also red, but it's very close, rising in momentum. And some of the worries and factors that goes majorly in favor of the bears. So basically, as I had said in the first slide, that was gross green and with a 20 expression moving average, more than that, and higher high and all that. It's bullish, but it is close green also, but we have the first factor of the resistance. And the kind of volatility that comes in, the big sell-off, big breakouts, all taking in and taking out the money. So that has not helped the momentum to climb and settle above the RSI 50. So the question is, will it fizzle out and consolidate for some time, or will it retest by replacing it more to where it came from, swing lows, or would it take it and then break out immediately? So that's the question. What do we do? Wait and watch out, but probably some news may need to come in, which may come in May 1st from the Fed rate cuts and things like that. Election outcomes can also cause that, and there is still the fear of the Middle East crisis, war crisis is still there. So technically the chart is saying it's sideways, but with mild bullish bias. That is what the same view I had last week also. It continues to be the same case. All the technical analysis can go for a toss if black swans come in the form of war or big major events and COVID and things like that, right? So keep a close watch and stay out of trade on such event days. There is one coming on May 1st, right? Keep that in mind. So 22 to 23,000 is the range for the next week on Nifty. 47,000 to 49,500 is the range that you have to look out for Banknifty. And as well as this 22,000 which is held as of now, and 48,000 also which is held as of now. As long as that is maintained, then it may be consolidating, and then it may take its own sweet time to make the next step move, right? So that's what we'll have to see. Always use hedges to carry forward overnight risk. Not take it without hedges. That's naked. Don't do that. Manage your risk. Have portfolio level risk management done. Portion size cut short if the VIX is spiking, and your capital is the only thing that you have to protect. And managing that is all. All the technical charts and studying is only giving you probabilities and not confirmations. So risk management will only protect you. So thanks for watching. I have probably posting in all the other channels also. If you want to subscribe, you can subscribe and hit the like button, put in your comments and share it to others so it reaches out to max. That's all I have. Happy trading, happy learning, happy investing. Thanks for watching. Bye bye.